Hey everyone, welcome back to the channel. If you're new here, please hit subscribe and tap like so you don't miss my deep dives into AI stocks, defense-related names, and companies that are moving under the radar but could surprise. Today, we're going to talk about BigBear, ticker BBAI. This video is for anyone thinking of investing in this company and wants to know what it does, what has been happening with the stock, the good and the bad, and what to watch closely. BigBear builds artificial intelligence-powered decision intelligence solutions. That means software and services for data analytics, predictive modeling, and mission support. Most of their customers are in government, defense, intelligence, border security, and logistics. They help clients ingest data, interpret it, make predictions, detect threats, and optimize operations. They also work with biometric identity tools through acquisitions like Pangiam. That gives them exposure to security, identity verification, airports, and border control. The idea is simple. As AI, cybersecurity, and predictive analytics become more essential, BigBear wants to be the partner that governments and enterprises choose. In the last few quarters, BBAI has made headlines. In its second quarter of 2025, it reported revenue of about $32.5 million, which was down about 18% from the same period last year. The decline was attributed to disruptions in some government contracts, especially U.S. Army programs that are being modernized or consolidated. The company lowered its full-year revenue guidance to between $125 and $140 million from prior expectations of $160 to $180 million. Gross margin slipped, adjusted EBITDA stayed negative, and net losses were significant. These are real numbers and they matter to investors. On the other hand, there are positives. BigBear reported a record cash balance of about $390 million as of June 30, 2025. The cash gives them runway. Management has highlighted this strength. They say it allows more flexibility to invest organically or through acquisitions and to weather some short-term disruptions. The company also reported a backlog of about $380 million at the end of the second quarter. That is much higher than a year ago. Backlog means contracts in hand or promised work which should convert to revenue over time, even if not immediately. This is one of the key metrics to watch because it shows demand and pipeline. Another source of hope is the policy environment. The U.S. government is putting money into artificial intelligence, defense modernization, cybersecurity, identity verification, and border security. BigBear positions itself to benefit from these trends. For example, they point to opportunities under large legislative bills that fund Homeland Security and the Department of Defense. Those programs could favor companies with mission-aligned roadmaps. Investors also noticed real-world deployments. One example is the enhanced passenger processing system at Nashville International Airport. This is a biometric system that uses facial recognition to help U.S. citizens move through arrivals faster. These deployments give credibility. They show the technology is not just talk but actually installed and working. That can lift investor sentiment and attract new contracts, but it's not all smooth. There are serious risks that any potential investor should understand. Revenue is declining and guidance has been cut. That is a warning sign. Margins are under pressure. Costs are rising, especially research and development and general expenses. Losses are large and increasing. The net loss in the second quarter was much worse year over year, driven by non-cash derivative liabilities, impairments, and high cost of growth. Adjusted EBITDA remains negative. If revenue does not pick up or contract wins fall short, losses could get worse. Contract risk is another major issue. Because many of BigBear's contracts are government or defense-related, delays, policy changes, budget cuts, reorganizations, or requirement changes hit hard. They already cited disruptions in Army contracts as a cause for the guidance cut. Those programs being delayed or modified can directly hurt revenue. Government contracting cycles are long and often unpredictable. Missed delivery or regulatory issues can stall payments or renewals. Valuation and dilution are also concerns. Optimistic investors have bid up the stock, and that may already be baked in. Relative to current revenue and losses, some analysts believe the stock looks expensive. Dilution risk is real. As losses mount, the company may need to issue more shares or convertible debt. Non-cash liabilities and derivative instruments are already contributing to losses. Margins are being squeezed too. Gross margins have dropped because of lower volume in certain high-margin contracts like those Army programs. Higher research costs, supply chain issues, and increased cost of deployment all affect profitability. If costs rise faster or revenue falls short, the squeeze will worsen. For someone thinking about investing in BBAI right now, these are the signals worth watching. Look for new contract wins, especially government contracts and deployments. Watch announcements of technology milestones. See whether guidance improves or at least stabilizes. Check for signs of margin improvement. Monitor how the cash balance evolves and how fast they burn through it. Keep an eye on insider activity and institutional ownership. Watch how they manage those non-cash liabilities and derivative exposures. Finally, follow macro and legislative factors like budget allocations for defense and AI, policy around biometric data or identity verification and border security. These external forces can swing things significantly. My own view is that BBAI is a speculative name with some strong potential but also big downside risk. It has elements that make it interesting. Real contracts, strong AI tailwinds, government focus on security, growing backlog, and a cash cushion. But it is far from safe. I would treat it as a high-risk, high-potential bet. If I were investing, I would put a small allocation rather than going heavy. I would want to see contract wins and better revenue trajectory before committing more. It might be a trade rather than a core long-term hold unless the company starts showing stability, margin improvement, delivery, and execution. BigBear has built a narrative that resonates. Artificial intelligence plus government contracts plus identity and biometric tools plus growing backlog plus cash cushion. Those are positives. But the financials, guidance cuts, contract disruption risk, losses, and potential dilution are heavy caveats. The key question is whether management can convert backlog into sustainable revenue and profits, navigate the government contracting maze, and do it without burning through that cash. If they can, the upside could be significant. If they cannot, the downside could be large. Wrapping up, BigBear is one to watch closely. It has promise but also big challenges. If you liked this breakdown, hit like, subscribe, and comment what you think. Is BBAI the next AI defense winner, or is it too risky for your portfolio? Thanks for sticking with me. Stay sharp, stay informed, and always do your own research. And just to be clear, I am not a financial advisor, and nothing in this video is a recommendation to buy or sell. This is just my take based on what I found, for you to use in your own due diligence.